Welcome to Strategy Saturday. I'm Charles Carillo, and today we're going to be discussing why small apartment complexes have inconsistent cash flow. So the dream of most real estate investors is to buy a predetermined number of units and enjoy the passive income that is produced from them. The reality is most real estate investments are not passive, even if you have a property manager. And best, they're semi-passive. But why? Well, when someone is designing their acquisition goal, it's usually 25 to 50 units, where in their calculations, they're able to make $10,000 plus per month passively. Typically about $200 per unit per month is the cash flow metric that most people use. They might also have their goal for 20 units, but with no debt. And these are all great plans in theory. But real estate investment is a business, not a passive investment like mutual funds. Tenants move in, tenants move out, stuff breaks, items need to be replaced, wear and tear needs to be addressed regularly. And Mark Cuban has a great quote, sales cure all. The more gross income solves all problems. And this holds true in real estate investing as well, but we could be worded a different way. More units paying rent solves all problems. So how did you design your portfolio to be more consistent and less volatile? If your plan is to purchase the 25 to 50 units and create passive income at $10,000 per month, keep this plan, but mix it with some investments in larger properties. Easiest way is to passively invest or partner with some other active investors in a joint venture. It gives you more exposure to more units, to more income streams, equaling more consistency in cash flow. For example, if you and I have $1 million invested in real estate, you own 20 units free and clear, I own a small part of 20 200 unit complexes or 4,000 units total. Who do you think will have more consistency in their cash flow? My income is based off 4,000 income streams versus yours is based off of 20. For you, what happens if 2 tenants move out and they are vacant, 2 don't pay and 1 is under eviction? 25% of your cash flow is gone. You trying to make your debt payments and all your other payments or your other expenses and management is going to be an issue. So if you're investing in multifamily and small multifamily yourself, I would really strongly suggest that you start looking into larger passive investments while also possibly partnering in joint ventures, even if it's in your same market, with larger properties so you can have more units that are paying you every month. Thank you for listening. Remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. Look forward to 2 more episodes next week. See you then.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.